What's up, traders? Welcome back to SMC Made Simple. If you're new here, this channel is all about breaking down smart money concepts in the most real and simple way possible. Order blocks are one of the most misunderstood tools in smart money trading, but when used correctly, they can completely change how you enter trades. In this video, I'm going to share my personal definition of an order block and break down the 3 types of order blocks I use in my trading every day. And make sure to stay until the end, because that's where I'll share the most important lesson that ties all of this together. Let's get straight into it. This first one is what I call a low probability order block. It's technically valid, price returns to the zone and reacts, but there's a problem. The wick is way too big. Personally, I don't like trading OBs that have long wicks like this. It usually means there was a lot of indecision or volatility inside that candle. Even though this setup might still work, I would either skip it entirely or risk way less than usual. The cleaner the order block, the more confident I am, and this one just doesn't give me enough structure or confidence to size in aggressively. This next one is what I call a valid order block. We had a clean market structure shift and a clear displacement that created the OB. Now, the first candle that closed below the OB wicked back up, and the second candle is the one that actually closed below the order block zone. That's still a decent setup. I would definitely consider trading this, but it's not the highest probability OB in my playbook. For a top tier OB, I like to see the first closing candle fully commit and close below the block without hesitation. Still, this setup has structure and displacement behind it, so I'd be comfortable trading it, especially with added confluence like a session time or EMA rejection. Now this is what I call a high probability order block. We've got everything we need here: a clean market structure shift, a solid displacement move, and most importantly, a candle that fully closes below the OB with no hesitation or wick back. This kind of OB gives me confidence. I'm much more likely to go full risk on a setup like this, especially if it lines up with session timing or other confluence like EMA rejection. It's clean, decisive, and shows that institutions were in control. That's the type of setup I want to be involved in. So to sum it up, not all order blocks are created equal. The first one was too wick heavy, low confidence. The second one had a decent structure but lacked that strong close. And the third one, that's the gold standard for me. When you learn to rank your OBs like this, you naturally start taking better trades and managing risk way more effectively. Once I've marked out my order block, I'm not just entering randomly. I'm waiting for price to return to the OB zone, and once it does, that's where I'm looking to take the trade. Most of the time, I enter right at the high or low of the OB. That's my style. I like to keep it simple and mechanical, but if you want a tighter or more refined entry, you can always drop down to the 3-minute or 1-minute chart and wait for confirmation, like a small structure break or a strong rejection candle. My stop loss always goes just above or below the OB. If it's a high probability OB, I'll risk full size. Mid probability, I cut my risk in half, and low probability, I'll either skip it or go in with just 0.5%. I usually set my take profit at the next internal liquidity level, the swing highs or lows on the 1-hour or 4-hour chart. I'm not trying to hit a home run, I'm just aiming for clean 2R or 3R trades. And now comes the most important part, something I learned the hard way. None of this matters if the higher time frames or the institutions aren't on your side. You can have the cleanest OB setup, perfect structure, perfect reaction. But if the higher time frame bias is against you, it's probably not going to work. That's why I always build my bias from the top down, starting with the daily, 4-hour, and 1-hour, before I even look at entries. Smart money moves with intention, and if you're not aligned with that flow, you're basically trading against the tide. So always start with the higher time frames. That's where the real story begins. So that's how I personally use order blocks, ranked by probability, applied with structure, and always through the lens of higher time frame bias. If you got value from this video, do me a favor, drop a like and subscribe to the channel. I'm posting SMC breakdowns, strategy tutorials, and real trade logic every single week. And if you want me to break down things like fair value gaps, liquidity traps, or my full session model, just comment below. I read everyone. No hype, no gurus, just clean smart money concepts. Catch you in the next one.